All right, so welcome all for our weekly webinar, Week Ahead with Religare Technicals. As most of you know that we talk about the market performance during the week, top sectors which performed well during the week alongside with the losers or the underperformers, then followed by top 5 gainers and losers from the Nifty 50 basket. Then comes the actual part means our view on Nifty and the banking index for the next week alongside with some of the stocks which looks technically sound or weak for the next week. We end this presentation with a quick feedback poll, and then any questions related to the uh, you know whether it's sectors or index, we can use that Q&A button which is there in the front of your screen to ask the questions. So we quickly start with a disclaimer first that the idea behind this webinar is to share the insight based on the technical presentation of the overall market scenario. It's not a trading or an investment recommendation. So before making any decision based on the information shared, please check with the financial advisor. So let's start with the past performance, means this week's performance. Both Nifty and Sensex remain sideways. Tone was positive largely because we managed to end almost flat to margin in the green. But it was more of like time consolidation that we've discussed earlier also, that markets are in the mode of consolidation, but we are not seeing price-wise damage. So it's a healthy consolidation. So far, we have not seen any major decline in the market. But yes, the upside is also capped. So in such a scenario, it indicates that bulls are in control. So they are not allowing the market to go down. But at the same time, profit taking the select heavyweights, from across sectors, that is capping the upside. So as you can see on the screen also, banking, the major contributor for the week, was the highlight. So 3% kind of gains in banking index, followed by IT, financial services, metal and realty. At the same time, when banking and IT, witnessing decent traction, it was FMCG, auto, pharma, energy and media that were on back foot. So auto, energy, they were the one basically which was pushing the markets higher. So some of the profit taking in the other key sectors balanced the entire equation. Now coming to the top 5 gainers and losers from the Nifty 50 basket, as you can see that top 3 names, in fact 4 names from banking and financials basket, ICICI, Axis, SDFC and Shriram Finance, among the top 5 gainers from the Nifty 50 basket, followed by Adani Ports. At the same time, 3 stocks from the auto space which ended as a loser, wherein Hero MotoCorp, Maruti and Bajaj Auto, they have lost in the range of 3 to 6%. Then we had Ultratech and L&T also, which drifted gradually lower. So this is the snapshot of the performance during the week, wherein we saw that it was a week of consolidation for the index, but stock specific broader indices, there was noticeable performance, outperformance, and the highlight was the strong up move in the banking index. Banking made a new record high. Now let's talk about what we are anticipating for the next week. So as you can see that last week also we were seeing that Nifty is trading in a very narrow range. This was the scenario last week. Similar kind of a setup that we had this week also. So what it indicates is that it's more of a correction phase. How it is different, like we've explained last time also, correction can be this also, means a decline, or it can be sideways also. So I doubt, yes. So similar to this, something like this, when we had this correction or phase like this, where market hovered in a range and then followed by an up move. So this kind of correction is positive. This indicates that the buyers are aggressive. They are not allowing the market to witness any dip. But at the same time, 23,600, that is acting as a strong hurdle. So until we decisively close, sustain about 23,600 mark in the Nifty, this sideways bias will continue. Downside 2300 to 23,100. This zone will continue to act as a strong support. So nothing changed when it comes to the major level for the indices. Even for the next week also, we have shared the similar level. last week that 23,600. Once we cross that, then 24,000 mark. So we need a decisive close above 23,600. So that is something which is critical because banking has already moved up very sharply. So now we need to see, whether auto, resumes its uptrend, energy counters resume their uptrend, plus IT, which has still not performed, or some of these FMCG majors, they can help the markets to sustain or inch higher. So that is going to be the uh, important criteria for the markets. Now, banking. This is banking. As we can see that last week also we discussed about banking being the uh, highlight, could be the highlight. So it turned out to be the one. Means this index, the weekly graph, as you can see on the screen, it's a steady uptrend, but like thrice we have retraced after testing that mark. But this time, finally, we could decisively break this level on a weekly basis. It's a strong green candle. Unlike what we are seeing in Nifty, banking is telling a different story altogether. And that's the reason why we have this comfort that market is not going to witness any major correction in the near future. Because banking and financials put together holds around 40% weight in the index. At the same time, if we include IT, then this weightage goes to around 50-55%, which also looks positive. So I don't see any reason that market might witness a sharp reaction. There could be marginal profit taking or beta in the range of 300 to 100. That should be utilized as the buying opportunity, not to go short. So for banking, after this breakout, 52,000, 52,500 is going to be the area where it might face resistance. Downside, 51,150. That's the first support, and then 50,600. That's the area where one should look at. Within the banking, but we still feel that private banking majors has an upper hand. At the same time, we have started seeing traction in some of these mid-cap banks which were not participating earlier. So stock like CUB, stock like RBL Bank, they have also started witnessing decent traction. So alongside the private banking majors, the focus should be more on mid-cap bank names. Be very selective in the PSU basket. Today also we saw that the PSU bankings were slightly on the back foot. So for a time being, it's prudent that one should avoid PSUs if the view is short term. Now let's talk about stocks which should be on your radar. First name that comes is Granules. So Granules, the stock is trading at the record highs. As you can see that we have finally beaten the record highs after a pause for a week. We have discussed about this stock earlier also. And we feel, that within the pharma space is one of the consistent names wherein we are not seeing any major reaction, even during the corrective phase within the pharma majors. Though it's a mid-cap pharma name, but it looks completely upbeat, and the kind of price action volume we are seeing, we expect this tone to continue. So Granule should be on your radar. Next on the list is IEX. So IEX, the chart is self-explanatory. There was a phase of decline from 264 to 120, then almost around 8 to 9 months of consolidation in a broader range, and finally this breakout, a decisive green candle. This week was a week of pause. It's a buying opportunity. Basically, those who have missed the chance to enter this stock earlier, this stock is offering a buying opportunity by this pause or consolidation. So this can also be considered for accumulation on dips. Positionally, this stock has potential to test around 200 plus zone. So this is another stock that shows strong sign of reversal in the power space. And lastly on the list we have LTF. So as we were discussing that banking and financial look upbeat to us. So LTF has also made a decent breakout followed by this week of pause. So we feel that this consolidation and this pause should be considered as a buying opportunity because we have just seen a breakout from a range from 145 to 175. And this pause indicates a possibility of the next leg up move. So one can accumulate, consider accumulating LTF also at the current levels. So just to sum it up our view, 23,600 in the Nifty is still a hurdle. But since we are seeing the heavyweights, the sectors, key sectors which have weight in the index, like banking and IT holding strong, our view is positive. So any dip in the range of 23,100 to 23,300, look for buying opportunity. Sectors like we are seeing rotational buying across sectors plus certain themes, agri-related, be it sugar, chemicals, means agrochemicals, chemicals. Otherwise, also they are gaining traction. Plus some of these stocks from the defense basket. Today it was railways. So selectively, we are seeing buying in themes every now and then, but since they are volatile in nature, we stick with their stop loss, especially if we are playing any theme related to the budget. Other than that, when it comes to banking, our view is positive. We are at 52,000 to 2,500 levels. Among these stocks, we've discussed about three names: Granual, IEX, and LTF, which look strong to us. So this is all from the presentation part. We'll have a quick feedback pool, and then we can start with the Q&A. So please quickly fill your feedbacks, and then you can start posting your question using the Q&A button. Please quickly fill this feedback so that we can start with the Q&A. And if you're done with the feedback, you can start posting your question using that Q&A tab. Right, so let's get started with Q&A now. Okay, so we have the first question from Nirmala Devi that how we are seeing metal and cement. So metal and cement broadly they are holding strong, but as a sector means but stocks we are seeing mixed trend within this space. So when it comes to cement, of course, Ultratech is the name which comes first to that list. This week it was a week of correction, nearly 5% kind of a cut. I feel it's a buying opportunity. Other than that, Sri Cement and yes, Sri Cement and India Cement, they are some of the names wherein we have not seen much traction yet. So these are some of the names alongside with this, one can consider within the cement basket. Then we have name like Ramco, which witnessed a very sharp recovery of late from a declining phase, but it's taking a breather now. So if somebody is looking for highly volatile and means a high beta name, then Ramco can also be considered. Within the metal space, see, metal as a pack is definitely holding strong, but the most stable name within this space is Tata Steel, that is Tisco, which hardly participates on the down days, means there's hardly any correction. The stock is holding around its record highs. So this is one stock which can be considered even for fresh accumulation. Then the other names like Jindal Steel, JSW Steel, they are highly volatile in nature. So if somebody is like looking for a high beta name, then this can also be considered. But in my opinion, I feel that Tata Steel is a better name to stay in, considering that there is still a possibility of marginal dip within the metal space every now and then. So they usually witness sharp corrections during the down days in the steel and JSW Steel. So Tata Steel is among the best names which one can look at. So Lakshmi Lalji, see, we share three stocks, which look upbeat to us, but there is no recommendation, as I have mentioned at the beginning of the presentation. So it's not a trading or investment recommendation. It's just my observation that how I'm seeing the market. If you are associated with us as a Religare client, then definitely we talk about these stocks in detail, means their targets and stop losses and other things. So in that case, you can get in touch with your branches or business partner, and they'll suggest you accordingly what is our target areas and all. But here, what I'm sharing is the overall perspective, basically, that how we are seeing the market and which stocks and sectors should be on your radar. So banking and financials and LTF from that space is something that positive. So based on your risk appetite, on your own discretion, you can maintain the target in stop losses. Okay, next we have, there's anonymous attendee, Sensex. So Sensex basically is 3.3 times of the Nifty. Largely, it holds this equation. So if you multiply the current level of Nifty into 3.3, you'll get the levels for Sensex. So let's say if we are talking about 23,300 being the support. So 23,300 into 3.3, that will be the area of support for the Sensex. So that is how one can calculate if you're looking for support and resistance for the Sensex. Okay. Stock specific questions. See, I request not to please post stock specific queries. Anything related to particular sector, we are happy to answer. Okay, next we have query on pharma space. So see, pharma as during the presentation also we have discussed that certain names, they are holding strong within the pharma space, like in the mid cap ID names, we have Granules. Then we have stocks like Divis Lab, Dr. Reddy's, which are also holding strong. So keeping that in mind, I guess it's prudent that one should be selective in this space. And as what charts are also indicating, that there could be a bit of a profit taking in the following week as well. So be very selective. Granules looks, definitely upbeat to us the way it closed on the week and daily basis. Then we have stock like Dr. Reddy also, which is trading with support, and Divis Lab. It may witness some consolidation, but the overall tone looks positive. Okay, so okay, so next question, the impact of rupee depreciation on IT stocks. So it's positive, because they earn in USD in the other foreign currency, so it boosts their revenues, but to an extent, it's not completely like the entire gain of depreciation reflects in their earnings and results. So for a time being now, you can understand if it's a sustained decline depreciation in the rupee, then it's definitely indicates positive in the next quarter results. So the relationship is positive. This means from the rupee depreciation point of view to the IT stock and their performance. Okay. Next, we have auto ancillary space current status. So auto ancillary as a space is doing pretty well. In fact, Mothers and Sumi, known name from that space, has done exceptionally well from the F&O basket. Then we have others names also like Suprajit, means multiple names from the auto ancillary basket which have done pretty well. Fresh buying, I feel that there could be a bit of a consolidation if the auto index, like the way we saw the decline in the auto space this week. There could be a bit of a breather in the auto ancillary space. Let's explore the auto index. So it's been a phenomenal move. Because on a month-on-month basis, as I can see that the auto index has moved up from 16,000 mark to 26,000 mark. So roughly around 10,000 point kind of gains in last 8-9 months. So some healthy consolidation is likely, so that might reflect in the auto ancillary space as well. So for a time being now, don't go look for aggressive long. Gradual accumulation is something that one can consider. Okay, fertilizers space, Mr. Devraj, as we have discussed during the presentation itself, that this week was phenomenal for some of these fertilizer names, and after this day of pause or a decline in some of these fertilizer stocks, the tone looks positive because the kind of volumes that we were seeing during the week was phenomenal. So I doubt that this move is going to fizzle out anytime soon. So the best approach, when it comes to the play the fertilizer stock is to restrict your quantity, means the portion of your trade to the entire this particular space. Don't put all your money into this particular space because volatility is going to be high. So minim, minimizing your allocation so that you can afford to see the volatility which you are seeing in this space, then definitely is going to be profitable proposition in the coming week as well. Okay, so Mr. Naveen has queried on Infra Space. So Infra Space, see, it's a big term which encapsulate the other all the major sectors like metals, cement. So indications largely are pointing towards that. In fact, the capital good names as well. There could be some consolidation in this space because they have outperformed well. But as middle names, we are still seeing certain stock. There's going to be more of like stock specific scenario instead of the entire sector. So only one sector which I feel I have comfort to invest in at present is IT, where we have not seen major traction yet. Then we had FMCG, like we've discussed a couple of webinars earlier also. They have not participated much. So we have a cushion, means there's downside seems cap. So that's the best part. But when it comes to momentum, banking looks certainly upbeat. So other sectors, they may continue to see selective participation every now and then. But overall, if let's say we are planning for 1 week, 10 days kind of time horizon, then preference should be given to the sectors and names which we have discussed. Okay, PSU metal. So again, Nirmala ji, as we discussed, Tata Steel is something that we should look at. The other PSU name in the metal space, they are highly volatile now. They have done exceptionally well in the past, so there could be sustained volatility in the near future. So for a time being now, it's something that one should refrain from PSU counters in the metal space. Okay. So this answers the query. So any preferred sector? So as I've mentioned that IT is one alongside with select FMCG names, wherein if somebody is risk averse and looking for something which has more upside in comparison to the downside, then IT is a name that one is focusing on, and pick and choose selectively from the other sectors. So yeah, with this, we have answered all the queries. So thank you everyone for participating. Next week is going to be the week of, yes, it's going to be a week of, final expiry, monthly expiry. So there'll be a rollover webinar on 28th. So you can join next week, same time, same place for our rollover webinar. So till then, take care. Thank you everyone.